This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, emerging market shares firmed up today with MSCI's index hovering near 10-month highs. Of course, sentiment was responding to an unexpected rise in China's economic growth for the first quarter. Now, on the continent, South Africa's JSE weakening today despite some risk on trade. A firmer rand benefited the banks but put some pressure on those local miners. Diversified miner BHP was down almost 3% today on news that it had lowered its production forecast for iron ore. Now, also coming up on the show today, a report shows South Africa has suffered a massive dent to its growth in the last 12 years. The EU proposes tariffs on $20 billion worth of US goods over Boeing aircraft subsidies. And Shoprite helps this young entrepreneur enter South Africa's growing retail market. Well, let's start off the show in South Africa. The country has suffered a massive decline over the past 12 years than any other nation not at war. Now, the startling admission is based on security, governance and prosperity indicators that compare South Africa's economic performance on an annual basis. The latest analysis shows that South Africa slumped to 88th out of 178 nations in 2018 from 31st in 2006. That, of course, makes it the single biggest drop for a nation not involved in an international or civil conflict. Now, the decline is set to continue as the country wrestles with the consequences of 9 years of worsening corruption and policy paralysis under former President Jacob Zuma. Well, let's discuss this further with Angelo Coppola. He joins us now in Johannesburg. Welcome to the show, Angelo. Now, of course, despite this drop in the country's social, economic and political performance, there still are a few who remain positive about South Africa's prospects. So, Angelo, is there a general consensus that President Ramaphosa's economic recovery plan is failing?
Look, there are positive pointers. We can just look at the $100 billion investment drive that seems to be on track. It's a sign that certain business sectors are keen on the South African prospects. It's a definite push to boost foreign direct investment into South Africa, and it is working. It's seen by some analysts as an increased confidence from investors already in the country. They still believe in the Ramaphosa that was created in February last year. The auto sector is a case in point, of course. Just last week, we heard about Nissan, who'd invested some $214 million into some plant improvements, and this follows the BMW investment in 2018. Of course, the tax incentives make it a no-brainer in the auto sector. The real game changer, though, will come from non-auto sector foreign investors who aren't already in South Africa. On the downside, though, there's the concern about the outflows of capital from the markets. That continues as investors with hot money look for certainty and stability in other countries and other markets. The country's business confidence index is also an indicator of what's going on. SACI released its most recent one, and it shows that it was down in March. It also seems that as if everyone's waiting to see what happens politically after the elections on the 8th of May. Uche.
Well, Angelo, let's talk about the country's investment grade. We know ratings agency Moody's is yet to give that investment grade rating. Now, it did say yesterday, Angelo, that the upward trajectory of public debt in the country and certainly the weak economic growth, it was still quite worrying. Now, looking at the state of state-owned enterprises in the country right now, is there light at the end of the tunnel or is the country heading towards a downgrade?
Well, look, the ratings agencies are all concerned about those debt levels that are spiraling a little out of control, and they're also concerned about weak economic growth. And last week, the IMF lowered its growth forecast, and now it's below that of the Central Reserve Bank and also National Treasury. The public debt growth is the huge concern. Ramaphosa promised action in the bigger SOEs like Eskom, SAA, Transnet, Denel and Petro SA, but it's not been forthcoming. If Eskom, of course, were to default, perish the thought, it exposes the government to a massive cash call. The government can cover that cash call, but in the short term, the implications are too ghastly to contemplate. SAA is still working on its turnaround strategy, but we haven't seen any meaningful upside there yet. It took another guarantee recently as well. Transnet is, of course, muddling along with huge corruption issues hanging over its head at the moment. And, of course, Petro SA still has to properly explain how the then foreign energy minister, in fact, sold off the country's strategic fuel reserves for a song. So the assessment at the moment is that the tunnel is still dark and the agencies are holding back on downgrades until the end of the year, which allows the country's election dust to settle and for the ruling party to sort out any outstanding leadership issues. Uche?
Now, what does this all mean for South Africa's political future? Will we see President Cyril Ramaphosa, who of course pledged to clean house in government, see his leadership a challenge going forward, especially in the upcoming May election?
Well, look, there's several schools of thought about Ramaphosa's future. First off, he gains enough support in the build-up and post-election period and becomes president for the next full term. He reduces the power of the other factions within the ANC sufficiently so that he can implement those stalled cabinet changes he wants to make, and that includes reducing the size of the government that is currently in place. The second scenario is that the top body in the ANC recalls Ramaphosa after a reduced election win, blaming him personally for the drop in the majority and installing one of the anti-Ramaphosa faction leaders. The third scenario sees Ramaphosa maintaining that winning margin from the last elections and is kept in place until 2022 with a sword hanging over his head to toe the party line and not to rock the boat when it comes to things like the bloated public service sector or the number of government departments, and also to tone down his fight against corruption, which means the country continues on that flat economic growth path with opposition parties picking away at the winning percentage and making an improved showing at the next municipal elections. And finally, there's a generally held view that the party won't move on Ramaphosa prior to the elections. They simply have too much to lose at the moment, Uche.
Well, many thanks for that update, Angelo. Of course, that's Angelo Coppola joining us there in Johannesburg. Well, let's move on now. Australian minerals firm Orion Minerals has successfully raised about $5.8 million, which is needed to finish its bankable feasibility studies. Now, the company is looking to restart the Prieska copper and zinc mine in the Northern Cape in South Africa. In efforts to restructure, it has made plans to have about 20% black ownership of the company and a further 10% ownership split between communities and its employees. Here's CGTN's Angelo Coppola again with more on that story.
This isn't a new discovery. It was last mined in 1991. The mining rights were owned by Repli Trading, who took over the asset in 2010. Repli now has flipped up its ownership into the shareholding in the JSE-listed Orion Minerals entity. Orion now owns the Prieska project.
We had worked on it with minimal resources, and it has now become attractive to other parties, and in this instance, not only Orion or international shareholders, but also local black shareholders.
The company is now weeks away from a bankable feasibility study, and the BEE investors have been given an opportunity that doesn't come around very often.
If you look at the project itself, the turnaround, isn't that hefty. Within 3 years, after production starts, the mine breaks even. So we fairly confident, as much as there's a long, view on this thing, it's one of the quicker, I think, mines to get in production in turnaround.
The reason for the excitement is that it's an established discovery, and with the use of new technology, the upside is potentially huge.
The fact that they've decided to embrace transformation right in an early stage before even going into development, which means that the new BEE partners get a chance to invest before there is a material uplift in the value of the equity, is a really great thing, because that's a way of paying back.
While the South African mining sector remains a significant employer, this project is going to be almost fully automated.
At steady state, we expect this mine to employ about 800 people. Now, that's a lot of people, in the Prieska environment. The bottom line is the town won't be the same. In any other environment, 800 isn't that big, but for Prieska, that's significant. Direct employment. I think if you look at secondary, opportunities, we were looking at, anything between 1.5 and 2,000 jobs.
The project is a world-class zinc and copper ore body. There's nothing quite like it in the world. In geological terms, the Prisca large lens exceeds 90 million tons, and the experts say that the smaller lenses surrounding the large lens haven't been mined yet.
There are very few bodies like this that you could find in the world. In fact, the Prisca body now we know is actually the single largest volcanogenic massive sulfide VMS lens in the world now.
The geologists and the empowerment partners are excited about the potential of this project. It's now down to see how it affects the local communities. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
And shifting focus now, here in Kenya, the Jomo Kenyatta International Airport has reopened. That's following a bomb scare on Kenya Airways Flight 762 to Johannesburg. Now, during an argument with a flight attendant, one of the passengers allegedly said the word bomb while the plane was already taxiing for takeoff. The ensuing panic from passengers grounded the flight and extensive security checks were conducted. The passenger who raised the alarm has since been taken into police custody. Kenya, of course, is on high alert in response to an ongoing threat from Al-Shabaab militants. Well, now let's take a look at our corporate headlines today. South Africa's leading food producer, Tiger Brands, plans to fight a class action lawsuit over its role in the world's largest ever listeria outbreak. Now, the outbreak killed more than 200 people in South Africa last year. This was traced back to a factory run by Tiger Brands owned Enterprise Foods. And MTN shares have risen about 6% so far this week. This is after the value of its e-commerce associate, Jumia, soared after listing on the New York Stock Exchange last week. It is the first time the network operator's shares have crossed this mark since August 2018. And Telkom has partnered with American multinational tech firm Avaya to provide a cloud-based telephone system. The solution, which is dubbed Omni Connect, targets corporates and small and medium-sized firms. It will allow local firms to outsource their voice services to the telco. And finally, a new draft report by U.S. Federal Aviation Administration has deemed Boeing's software update to the grounded Boeing 737 MAX aircraft as operationally suitable. Now, Boeing has been working on a software fix for its anti-stall system. That's following 2 deadly crashes that killed nearly 350 people. And that's a look at our corporate headlines. Well, let's head into a quick break now. Here's a look at what's coming up. Botswana unveils the largest blue diamond ever found in the country. And Ivanka Trump pledges a $2 million investment for women in Cote d'Ivoire's cocoa industry.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sumitra Naidu. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place. even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN. See the difference.
Africa is the nexus of enterprise, and global business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN. Welcome back. Now let's head to Zimbabwe. The country may withdraw mining claims from companies that are taking too long to exploit its minerals, and that's part of efforts to boost output in its strategic sector. Now, of course, Zimbabwe sits on the second largest known platinum deposits after neighboring South Africa. It also holds significant chrome, gold, and diamond resources. Here's CGTN's Farai Mwakutuya with the details.
Zimbabwe plans to grow mineral revenues from a projected $4.2 billion this year to over $12 billion by 2023. To help achieve that, it will compel holders of claims to use them or lose them, a proposition that makes economic sense, but that needs to be approached with caution.
If a company, an individual, local or international investor has been holding on to a claim for a number of years, say for example more than 10 years, then obviously the government would need to intervene. But on the flip side, however, there is also the emotive property rights issue, where you would need to say someone who is holding on to a claim or an EPO, which is basically an explorative prospecting order, might say I'm holding on to a property. So if someone is holding on to a property, that's the government would need to look at it on a case-by-case basis.
It's a potential minefield government is willing to navigate given the potential benefits based on recent precedent. There are almost 24,000 hectares of land behind me sitting on platinum claims that were held but not mined by Zimplats. In August 2018, they were granted to a new investor. Karo Resources has sunk about $8 million in exploration, which it's confident will yield a significant ore body that could potentially be the largest platinum project in the country.
In terms of employment, last time we're estimating that this project at the final end it will be employing around 15,000. But now the estimate is around 25,000 directly employed by this project. And at full production, it will be adding to the GDP by about 5 billion.
If achieved, that will not only set Zimbabwe on course to meet its 2023 target, but also vindicate authorities for their efforts to speed up returns from the country's vast mineral deposits. Farai Mwakutuya, CGTN, Harare, Zimbabwe.
Now, the second Belt and Road Summit will be held soon in China. Dr. Seleshi Bekele, the Ethiopian Minister of Water, Irrigation and Electricity, is scheduled to attend that summit. Ethiopia, of course, has extensive reserves of clean hydropower and wind energy sources. Under the framework of BRI, its cooperation with Chinese companies is still growing. Let's hear his thoughts about this mutually beneficial partnership.
It's an important intervention and investment. Countries like in the developing country and Ethiopia benefits from this kind of interconnection to develop their economy and to the benefit of their respective people. For the future, we'll continue to make new developments. For example, we're looking for major transmission and substation development in Ethiopia. We'll see also rehabilitation of major towns, about 53 of them coming under this program. On my side, I'll focus more on energy generation side. Also, I would like to visit some of the key companies that are operating, and also where we could really learn from and, for example, bring similar type of development in Ethiopia. China, with a huge population, 1.3 billion people, really made it successful through the ideology it has followed, development that is people-centered, and transformed its economy with rapid growth over, particularly during the last 30 years. That is very remarkable, and Africa has a similar type of population, about 1.3 billion now, can emulate on many of the Chinese best practices and development areas. If you take just energy, for example, State Grid alone operates 1.4 million megawatt. But in Africa, the total energy we have is 300,000 megawatt. So it's important to learn from China how Africa could leapfrog from this level of low level of energy utilization and development to highest level. Chinese progress is really miraculous in terms of satisfying its own development needs, and really became second strongest economy in the world. So many African countries can really learn from China how to develop fast and build their economies.
Now, of course, Nigeria has been officially included in China's Belt and Road Initiative, and now both countries are seeking to boost economic and trade cooperation. Now, with the various exchange activities that they're holding, the Belt and Road Initiative has now gained more understanding and support in Nigeria. Let's take a look.
The Abuja International Conference Center was the venue of the Belt and Road Initiative Forum. Relevant stakeholders from Nigeria and China, as well as the private sector, were in attendance. The focus of the Belt and Road Initiative is to boost trade, infrastructure and intercontinental relation among participating countries.
Belt and Road Initiative, though originated from China, belongs to the whole world and will benefit the people all across the world. As another end and the national extension of ancient Silk Road, and now as China's strategic partner, Africa is an indispensable part of the Belt and Road map.
China and Nigeria trade cooperation has grown over the years. In 2018 alone, trade volumes were $15.3 billion, a 10% increase from the previous year.
Nigeria shares the objective of the Belt and Road Initiative, which aims to develop economic partnership and build a community of shared interest and responsibility and a shared future on the basis of mutual trust, economic integration, and cultural inclusiveness.
The Chinese embassy also held the China-Nigeria Enterprise Exchange exhibition here. More than 100 companies set up booths in the conference center. It also facilitated room for skills exchange between Nigerian enterprises, the public, and Chinese enterprises. Michael Karanja, CGTN.
And moving on now, White House advisor and U.S. President Donald Trump's daughter, Ivanka Trump, is in Côte d'Ivoire. It, of course, is the second stop in her Africa tour that we saw kick off in Ethiopia. Ivanka has announced a $2 million investment for women in Côte d'Ivoire's cocoa industry. The money, of course, will be used to diversify commerce and supplement the income for the workers in the sector. Ivanka is in the country to attend the World Bank Summit on increasing opportunities for women. She hopes hundreds more international companies will join her quest in empowering women in Africa.
So today, in conjunction with the World Cocoa Foundation and all the private sector partners from great companies who join us here today, Administrator Green mentioned several of them, Mars and Cargill and Hershey and Nestle, who join us here on this site to celebrate what happens when you empower women and the opportunity that's created when you empower women, how they uplift their families, how they uplift their communities, and how whole countries prosper. Imagine how many will benefit if we have 300 more associations such as this, and we create a connection for 500 existing ones to the formal financial marketplace. So we are incredibly excited to have this opportunity to further the great work being done by the women here in Côte d'Ivoire in the cocoa industry.
Well, let's head to Botswana now. The country has unveiled the largest blue diamond ever found in the country. It is called the Okavango blue. Now, even though it was found in a country that's the second biggest producer of the precious gem, that's after Russia, this is still an exceedingly rare find. The stone was found in 2018 at the Orapa mine, which of course is operated by a joint venture between De Beers and Botswana's government. Now, earlier, the managing director of the Okavango Diamond Company put the diamond's rarity into perspective in conversation with CGTN's Raman Young.
They are exceptionally rare, and the reason you haven't seen so many is because there's so few out there in the world. And in fact, Botswana itself is not a big producer of diamonds, even though it's one of the biggest producers of diamonds in the world. So you're right; they're very rare, and this one is an exceptional find for the country. And in fact, this is the biggest diamond that the country has ever found of a blue tone.
How does it compare, compared to other blue diamonds that have been found elsewhere in the world, in terms of size, that is?
It's a very interesting question. I think people will look at diamonds through a multitude of lenses because there's a number of attributes you need to consider. There's a size, there's a clarity, there's a color, there's a purity. So depending on all of those attributes, you rise and fall up and down the rankings. But if you look at the totality of the attributes of this particular stone, the Okavango blue, it ranks amongst up there with the best.
All right then. So moving forward though, I remember the last massive find that we spoke about when it comes to Botswana in its diamond industry was Lesedi La Rona, and that hit the market for about $53 million. How much do you expect you're going to get for this one, for the Okavango blue?
It's a great question, and it's always the first question that gets asked. And I think we're quite cautious on speculating on what the ultimate value is going to be. And you can understand that a stone of this size and rarity, really the value differentials between buyers, collectors could be huge. I mean, we're talking the order of millions of dollars. So it's very difficult to put a price on something like this. What's important is finding a connection between a buyer and the stone, and I have no doubt that when this comes to the market that there'll be a fair few of those out there.
Right, let's just roll back slightly to the chemistry side of things, because diamonds generally are highly compressed carbon over millions of years, lots of heat, lots of pressure. But in order to create this vibrant blue hue, what exactly gets added to that equation?
So the unique element that appears in a blue diamond is actually boron. So boron is what gives it that blue hue. So that's what makes it distinctive from other diamonds. This is also called a type 2B diamond, which are also very rare. Less than 1% of all diamonds around the world are of a type 2B classification. And this all amounts to how this blue tone appears in the diamonds. And we need to also remember, a stone which is dated anything between 500 million and 3 billion years old is really where this stone sits. So it's difficult to say, but it puts time in perspective if you think about it that way.
Indeed, certainly does. Tells us just how short a time we've had on this little planet of ours. But turning to the wider end of the industry, I know Botswana has put a lot of emphasis into having the polishing and the cutting side of things being done within the country instead of having the raw stone shipped off to London or elsewhere to be cut. Was the polishing and cutting for this stone, for the Okavango blue, done in Botswana?
So your observation is absolutely right. Botswana is, apart from being an ethical producer of diamonds, and it has been for near on 50 years now, there's a multitude of activities from the diamond mining industry which take place in the country, from exploration, mining, cutting, polishing, and now the sales of rough diamonds, which is what Okavango Diamond Company are engaged in. With this particular stone, there's probably only a handful of people around the world who are qualified to cut and polish these types of stones because they're so unique, so rare, so valuable, and it's quite a technical process to manipulate the color within the stone to get the optimal outcome. So this was actually polished by a small team of expert craftsmen in New York over a period of 2 to 3 months.
looking at the diamond, though, because of the brilliant hue, its rarity and so on, this, to some extent, this provides the counter-argument to those who argue that the future of the diamond industry lies more with the lab-grown stuff as opposed to what we dig out of the ground in places like Botswana and South Africa.
The lab-grown diamond is like many industries, it's causing, kind of, I suppose, a disruption of sorts in the diamond industry. But I think there's an absolute strong market in the eyes of many consumers towards the natural product.
You're watching Global Business Africa. We're heading into a short break now. Here's a look at what's coming up. The EU proposes tariffs on $20 billion worth of US goods over Boeing aircraft subsidies. And Huawei launches the world's first 5G smart hotel in China's Shenzhen city.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Welcome back. Now, the EU has proposed tariffs on $20 billion worth of US goods, and that's in a long-running dispute over Boeing and Airbus aircraft subsidies. The proposition comes after the US said it was considering tariffs on about $11 billion worth of goods in response to the subsidies granted by the bloc. Now, the proposed tariffs cover a range of products from aircraft to chemicals and food products. Here's CGTN's Mariam Zaidi with more on that story.
It's a trade dispute that dates back some 15 years, with no solution yet between Airbus and Boeing, two giants of the aviation industry, both accused of receiving government subsidies and both caught in the middle of ongoing transatlantic trade tensions. But could the renewed Airbus-Boeing spat be part of a much wider trade strategy?
Donald Trump has always believed that America's deficit with many countries shows that America is disadvantaged, and he has promised to his electorate that he will do something about it. He will not stop. For the moment, it's Europe again, but overall, this fight against what he sees as unfair trade is going to continue.
Last month, the World Trade Organization ruled in favor of the European Union's position that the United States had failed to remove trade-distorting subsidies to Boeing that could severely damage European aircraft manufacturer Airbus's market opportunities. After the US threatened to impose tariffs on $11 billion of EU products ranging from wine and cheese to Airbus jets, the EU Commission then drafted a $12 billion list of its own. It includes frozen fish, handbags, car parts and helicopters.
What's really going on at the moment is that the EU and the US are supposed to sit down for more general trade talks in the coming months. Those trade talks were conceived as a way to ease transatlantic trade tensions and specifically to avert the risk that Donald Trump ends up hitting the EU car industry. And that is a whole ball of problems which predates these latest steps on Airbus and Boeing.
The EU approved its mandate to start trade deal negotiations with the United States on Monday, and the EU's Trade Commissioner is eager to get the ball rolling.
This is a limited but still meaningful win-win negotiations that we are offering. It's clearly in their hands. We are ready as soon as they are.
So could these talks take the gas off rising transatlantic tensions? Well, if not, this slippery slope of tit-for-tat retaliation may continue for some time to come. Mariam Zaidi, CGTN, Brussels.
Now, with more insight into this, Kate Fisher now joins us in Washington. Welcome to the show, Kate. Now, this tiff over aviation subsidies, it has been going on now for almost 15 years. The EU says it remains open for discussions with the US. Where does the Trump administration stand on this now?
Well, it is also saying that it is open to these discussions. The US Trade Representative Robert Lighthizer saying that the time has come for action. Our ultimate goal is to reach agreement with the EU to end all WTO inconsistent subsidies to large civil aircraft. But the caveat to that is that he's saying that once the EU lift their levies, then the US will respond. So essentially saying they won't lift theirs until the EU acts first. So although they're both saying they are open to these discussions, it could be that the US is expecting the EU to give way first.
Well, Kate, this does come at a time when the EU has agreed to restart trade talks with the United States. Now, a major sticking point in those trade talks is the fact that the EU says agriculture won't be up for discussion. What's the outlook for those trade negotiations?
Well, as you say, that is an immediate and major hurdle there, the issue of agriculture. Both sides have been very clear about this. The EU saying that there won't be a deal unless agriculture is not on the table. They do not want it included, whereas the US saying it has to be part of any agreement, otherwise there is no deal. Donald Trump saying that if the EU does not open up its markets more to US agriculture, he is threatening to slap tariffs onto imports of European cars into the United States, and Brussels responding to that by saying that if that happens, they will end these negotiations immediately. So both sides very strong about this. So that does pose a big problem before these talks even start, that they can't actually agree on the agenda for the talks. Then the thing is, both sides do need and want to have some agreement. They do need it. Donald Trump needs it to show his electorate that he is making deals. He's always promised to make trade deals since he came to office. He needs that ahead of presidential elections next year. And the EU need to get this sorted out before there are European Parliament elections later this year. So both sides want a deal, but at the moment they can't even agree on what they're discussing.
All right. Well, we'll certainly be watching that. Many thanks for your insights, Kate. Of course, that was Kate Fisher joining us there in Washington, D.C. Well, let's move on now. China's economic performance in the first quarter of 2019 has fallen within an acceptable range, sustaining progress in overall stability. Now, according to officials, the first quarter saw strengthened confidence in China's development. Here's CGTN's Wang Hui with the story.
China's GDP surpassed 21 trillion yuan in the first 3 months of the year, an increase of 6.4% at comparable prices year-on-year. The combined value of imports and exports was up 7 trillion yuan, a rise of 3.7%. The value of exports was 3.8 trillion, while the imports stood at 3.2 trillion. That means a trade surplus of about 530 billion yuan, up 75% from the same period last year. The ongoing trade dispute between China and the U.S. has now lasted for a year. I asked how this has affected the Chinese economy. A senior official from the Bureau of Statistics responded that the global economic recovery, the world's economy, and expansion of international trade have slowed as a result of rising trade protectionism in 2018. But there have been positive signals from the trade talks between China and the U.S., and the international capital market and international enterprises have responded positively.
It means that when the two largest economies strengthen their trade engagement and maintain normal mutually beneficial economic cooperation, it would not only benefit them, but also help the recovery of the global economy and international trade.
Market expectations for China's economy have also improved. The Manufacturing Purchasing Managers Index is more than 50% again, returning to expansion after 3 consecutive months of contraction. The Consumer Confidence Index was nearly 125 index points, 3.2 points higher than the fourth quarter last year.
The strengthening of confidence in economic development was a positive result of a series of new government policies on reform and opening up, particularly policies to maintain economic stability and cuts in taxes and fees for enterprises. International economic institutions have also raised their expectations for China's economic growth this year.
Beijing says that China's national economy performed within an expected range in the first quarter, sustaining the momentum of progress in overall stability with growing positive factors. It has laid a solid foundation for stable and healthy economic growth for the whole year. However, given the slowing global economic growth, international uncertainties, and domestic structural issues, China's economy may still face downward pressure. Wang Hui, CGTN, Beijing.
Now, Beijing's upcoming International Horticultural Expo means big business for small places and possibly even investment opportunities for you. One rural village just outside the capital city has seen a surge in visitors, and that's thanks to the expo. It offers a more traditional Chinese experience, and the business already generated has created jobs and investment possibilities. Well, CGTN's reporter Wang Mengzhen takes us there.
The Great Wall at Shixia Pass, with its broken fragments and watchtowers dating back to ancient times. At its foot, a village with the same name is now also drawing tourists. These courtyards serve as important getaways for more urban dwellers.
My friend recommended for me to come here. The grilled pork dish and fried eggs with stones are their specialties. When the dishes are served, it gives me a sense of ritual. Sometimes we even have to book in advance.
Unlike ordinary hotels, these countryside courtyards combine modern living and eating local delicacies, and it's a great opportunity to appreciate nature, particularly for our children.
About a half-hour drive from the expo venue, this boutique inn is one of the 124 guest houses branded as horticultural homestay by Yanqing district authorities.
This time, though, I noticed different things, like the indigenous fresh flowers and plants decorated in our guest rooms. Meanwhile, the service quality is always improving every time we came.
Its owner He Yuling says preparation for this horticultural event is not down, as the spring flower bloom just started here.
We've designed to plant different types of flowers in different yards. Each yard will turn into a mini pavilion, such as a rose or peony-themed yard. We're also training our staff to learn basic spoken English to better communicate with foreign guests.
When He Yuling took over inn operations 3 years ago, she had her work cut out for her.
Few visitors came here because of its remoteness, and many yards were old and had even collapsed, so we decided to renovate more than 20 yards.
But now this boutique inn is grander than ever.
In fact, our rooms are fully booked for the coming Labor Day holiday, and for a restaurant, a total of more than 2,000 diners are expected for the 4-day holiday.
Local authorities are behind the restoration of these old yards to boost Yanqing's rural tourism.
Relying on the impact of both Horticultural Expo and the 2022 Winter Olympic Games, many businesses are investing in Yanqing. Authorities have also massively funded preservation of the ecological environment.
Local authorities say after the expo, these vacation homes and yards will be redesigned to complement the 2022 Beijing Winter Olympic Games, a treat for sports fans from around the world. Wang Mengzhen, CGTN, Beijing.
And shifting focus now, electric mobility and self-driving technology. They're two of the biggest spheres of development in the global automotive space. Now, at this year's Shanghai Auto Show, car makers are showcasing their latest tech and new energy vehicles. Well, CGTN's Cheng Lei caught up with the CEO of Porsche to get his thoughts on the company's 2019 strategic focus.
Now, many know that you're the main cash cow for the Volkswagen Group. So how much pressure is there now to cut costs and increase productivity in order for the group to achieve its profitability targets as the group invests more in electrics and autonomous technology?
Yeah, I think that's our principal need for future, looking in what we will invest in future. Therefore, we are working in a result improvement program. Because when you look to electromobility, only the material cost will be much bigger, of around in between 8,000 and 10,000 euros a car. So you have the need for the future years to do something. Our strategic goal is to maintain our profitability of about 15%.
Legendary in the industry.
Yeah, we keep working on this. I think we have a good perspective to achieve this in future.
First quarter is down 10%, and especially in Europe and even China, it's also down, by about 10%. So how's that going to affect the rest of the year? Are you hoping to have a flat year? Numbers going to be down?
First quarter, which was below 2018, but that depends on the changes on the VAT and of the changes from C5 to C6 of the engine side. And we're expecting for this year another growth. Last year we had sales of 80,000 and this year in 2019 we will be even bigger than this.
How do you think your first full electric car, the Taycan, is going to go?
I think, first of all, we thought about 20,000 a year, and now with all the pre-orders we increased our capacity a bit, and expectation, I think we have to wait half a year when we will present the car, and then we feel, because customers haven't already seen the car.
What's interesting is that Porsche is actually part of the Belt and Road Initiative by using China Rail Express to transport cars from Germany to Chongqing in Western China, which saves transport time versus sea by about 20 days. Tell us a bit more.
Yeah, shipping our cars to China will cost us around about 50 days, and we can reduce it of about three weeks to go by the new Silk Belt crossing Asia, and I think that's very intelligent. We have about between 10 and 15% of our cars shipping by train. That's a pilot starting with, and when we will have success with this pilot, we will continue.
What are you looking to? How much are you looking to increase that to?
Yeah, we will watch how does it work, and I think at the end what counts is a result to bring our cars quicker to our customers, because a lot of our cars are tailor-made for our customers, so the waiting time is bad for the customer, and so we try to be even faster by this opportunity.
Meanwhile, Chinese tech giant Huawei has joined forces with Intercontinental Hotels to create the world's first 5G smart hotel in Shenzhen. Now, under the plan, Huawei's 5G network equipment will serve as a platform for the new class of immersive hotel services. Here's CGTN's He Weiwei with an exclusive inside tour.
With all the hype over 5G, will it live up to the lofty expectations many now have for it? Well, the world's first 5G hotel room gives us a sneak peek.
What makes this room special is this white box. It provides 5G signal. We all know that 5G means faster internet speed, but what else?
The answer starts with the cloud.
It's already a cloud PC. There's only a screen and my phone, and connecting with Bluetooth joystick, mouse and keyboard, then perform like a local one.
No CPU?
No.
Where is CPU?
CPU is on cloud. All the CPU, storage, graphic card, all on cloud.
It's 5G that makes this cloud service stable, powerful, and able to support complicated PC programs. The system can be applied for either work or entertainment. Thanks to that, more VR applications will also be available in the future without costing too much hardware upgrades.
We can deliver much more customized services, and that's probably the advantage after to add value to a stay and to an experience cycle in a hotel for the customer to have a greater stay.
The new 5G movement was in full effect Tuesday at Huawei's Global Analyst Summit in Shenzhen.
The company's vice chairman says 5G is being deployed much faster than expected.
So at Huawei, we anticipate that by the year of 2025, there will be 6.5 million base stations deployed, and there will be 2.8 billion users in the world, which will cover 58% of the world's population.
Times being what they are, with restrictions imposed by the US and other countries against its 5G network rollout, Huawei isn't even flinching. So far, the company has signed 40 commercial contracts for 5G, and thanks to that, the company is likely to see double-digit growth in its operator business this year. 何卫卫 CGTN 深圳。
Well, let's move on now and take a look at how commodities performed today. We saw Brent oil hitting a 2019 high above $72 a barrel. They were propelled by steady economic growth in China and a fall in U.S. crude stock. Of course, global supply still remains quite tight. Meanwhile, gold prices holding near 4.5-month lows today, touched in the previous session, as of course economic data from China tempered that concern about global growth, boosting risk appetite today. Well, let's head into a quick break. Still to come. Retail giant Shoprite helps this young entrepreneur enter South Africa's growing retail market.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
The greatest journeys, the greatest sights, the greatest adventures.
Here in Kanata, this weir allows the locals to walk on water.
We're far more than just TV news. We're your passport to the wonders of Africa.
To bring you stories of struggle, survival and hope.
So let's explore. CGTN. See the difference.
Now, access to the market remains one of the biggest challenges facing small businesses and entrepreneurial startups in South Africa. It takes years of hard work and sometimes tears to get a foot into the door of big retailers. Now, one South African entrepreneur has not only managed to get her homemade pickles onto the shelves of Africa's biggest retailer, but she's also just secured a spot in Shoprite's distribution center in the Western Cape. Let's take a look at her story.
Exotic Taste formally started when I was at a crossroads. I was divorced, I was unemployed, I had 2 children that I needed to feed and look after. I was making the product part-time for 4 years before that. The recipe was a hand-me-down recipe from an old aunt. I had a good tasting product, but I didn't have a market for it. But Shoprite made it easy. I asked them, please can you guys take a chance on me and have my product in your stores? Junaid Isop was the buyer that I spoke to, and he agreed. And that was like, oh, this is a big foot. This is a big foot in the door. everything is made by hand. I go to the market in the morning, procure my fresh fruit and vegetables. We process it, we cook it up, we pasteurize it to 80 degrees. It then gets bottled, labeled, shrunk, and then packed. I started out with 2 products, the lemon achar and the mixed veg achar. Today we have successfully distributed 8 products, 4 cooking sauces, 4 pickles to 51 stores in the Western Cape. You've come on a perfect day because the Shoprite head office has agreed to put us in the distribution center, and we are preparing 8 pallets of pickles and sauces for delivery. On a pallet of glass jar, there's 1,152 bottles that goes on there. We've got 4 pallets of that going out. The jump into the distribution center is big because the reach to more stores, more marketing, more sales is there. It's taken me 5 years to get to this point of my business growth. Shoprite Checkers have invested in me. They've held my hand through my growth phases. They've been the platform for me to build a product that is not only for any retailer but can also go internationally. There's a lot of things that happens when you move into the distribution center. Your growth is by far more. Currently, I employ 10 people. On site, we have 8, and then off site, we've got 2.
Well, before we go, let's check in on Africa's currencies today. Kenya's shilling coming under pressure against the dollar, and that's due to surplus liquidity on the local money markets and, of course, dollar demand from merchandise importers. Meanwhile, South Africa's rand pushing towards 13.9 rand per dollar, and that's on upbeat data both locally and internationally, such as, of course, inflation rising to 4.5% in March year on year, lower than the 4.6% which was expected by the market. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and of course the rest of the team, thanks for watching.